Hey everybody, good morning. It's Pete Renzulli. Welcome to today's episode of Stock Trading Pro. On today's Stock Market Live, we have a bunch of actionable stuff today. We're going to talk about creating the best list of the best stocks to buy right now for next week. Obviously, today's Friday. We're in the midst of a raging move to the upside right now in the market. The big question for all investors and traders right now is this a reversal of the stock market recession, which would be the shortest recession that I've ever seen? And is it time to start buying for a little bit longer time frames? Are you going to be afraid, fear of missing out, that you're not going to catch the bottom? So we're going to do sector rotation today. We're going to look at some of the recent trades. We actually got nice breakouts yesterday in consumer staple stocks, which was very exciting. Tesla stock did pretty much exactly what we game planned for. It had to get above that 770 level and hold the bid, which it did, which made it a pretty interesting setup yesterday. We got a bunch of stuff to talk about. Snap snapped last night. Micron got downgraded. We're also going to talk about the Fed meeting last week. And we're going to compare the recent price action in stocks right now to one of the last Fed meetings where I think Apple had its largest move since 2002. This is roughly 2 Fed meetings ago, I think. And why this time is different and why I think we have a little bit stronger foundation under the current rally. So it's going to be interesting. I'm sure if you're like a lot of other people who've been watching YouTube, reading headlines and being indoctrinated for the last month that all everybody was talking about crash, stock market crash. We kind of held the bid and it threw a monkey in that wrench and everybody was looking in one direction, kind of got caught off guard. But that's why we talk about this all the time, every day, which is priority number one is order flow and reading the tape, which is it obvious and how do I know when it changed? When you understand those two things, the stock market becomes infinitely easier if you have the discipline to follow what you actually read. That's one of the biggest things too. And it's Friday, so we're actually going to finish up with last night's coaching call, give you some ideas to head into the weekend. I think that you got some really good ones. So stick around. We're going to be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I really appreciate it. I love doing these live sessions. I hope you enjoy them as much as I do. I just want to say hello to my pal, John Oakes. Good morning. And say hello to the Johns today, John Oakes and John A. Good morning, guys. So I actually want to go over to the market. We want to dive right into the market quickly. And we want to talk about why this is a little bit different this time. And really what we want to do is we're taking a look at the sector ETFs and just looking at a little bit of a wider breakdown of it. And you can see that the Dow, even the Russell, the small caps have been following a rally. We've got some ag stocks rallying. Energy hasn't been rallying yet. Nasdaq has been leading the rally, and diving a little bit deeper from Nasdaq into semiconductors. You can see how strong semiconductors are, although they're at their breakdown level right now. You can see over here as well, retail bouncing. We're going to take a look at a couple of consumer staples today. Basic materials trying to rally again. Financials have been on fire, rallying themselves, and the S&P. So we're actually going to start out with where we are in the futures right now. We're down just a little bit, but I want to get across here. And we've been mapping this out for a while now, where we've been looking at this most recent move. And now this is the first time that we're breaking out of that box. So if you know that the way that we do things, it's very important that you start to map out what levels you think are significant. So right now, if we're taking a look at this level in the SPY, been absolutely amazing. We've had some people that are new that here on social media saying this week has been hard to trade. This has been one of the easiest weeks to trade, unless you're trying to pick a top or short it, trading against the other move. So what we're looking at right now, and I just want to give you a quick visual of this, is we're looking at, can the SPY, even though we're down a little bit this morning, can it fill that gap? And I'll show you what that gap is right over here. We'll actually zoom this out just a little bit over here. So you can see where we are right now. That's the most recent gap. So basic technical analysis, classic trading says that when a stock is rallying or pushing down, if there's no resistance in between, most likely it will fill the gap. That will usually be the first initial profit target, or where sellers might come right back in. So right now we're looking at that 401.50 level in the market. Now, the big thing I want to point out is the lower opening that we're looking at this morning does not necessarily mean where we're going to end up being when the market opens. And we've seen that quite a bit lately. And it's a very common question we get is, do you watch the pre-market futures, and how do you use the pre-market futures when you head into the day to trade the stock market, and how does that give you an indicator? So the big thing with the futures, and we've seen this a lot, and I'm going to show you a couple examples in a second, is that yes, obviously, if you're able to, you're not driving to work or anything like that, you should be watching the pre-market futures to get an idea of where stocks are expected to open. But we've seen a lot of price action lately in this bullish run that we've had up to the upside, and we're going to talk about whether it's a reversal of a bear market or just slightly, just short covering in the context of anticipating next week's Fed meeting, which is something we're going to talk about in a second. Is that right now the way the market is rallying, it's very, very strong, and I just made a case that it's very broad based, right? However, the difference between a short covering rally in the stock market and new buying is typically how it happens. And a very fast, unexpected move off the lows is typically short covering. So if you remember all the way back on Monday, which in Wall Street is like a million years ago, right? 5 days ago, we did talk about, actually last week and on Monday, we said tech stocks were rallying, financial stocks reported earnings, and they're kind of carrying the market, but the moves were vicious. And I want to show you what I mean by vicious. We can take a look at Goldman Sachs here. This is just absolutely incredible, obviously up at a resistance level right now. But if we kind of map this out and go from this low right here, this is a monstrous move in Goldman Sachs. That's 16%, right? Then we start taking a look at some of these other stocks, and we take a look at AFRM over the same short-term period, and even just go over these 5 days. We're talking about over 40%. And then we put in some of these other stocks like Mara, which is also up a gigantic percentage off the lows. We're talking about 134% move off the low. So why am I bringing that up, right? It's a very big thing. I just want to say hello. Good morning, Brian. How's it going, pal? Derek, good morning. Thank you so much for being here with us. Derek, by the way, your son's doing a great job in the boot camp with us. I really appreciate him being in there with us. So what's the point of talking about all of these big moves, right? What's the point? As an investor or as a short-term stock trader, it's critically important that you understand what price action you're looking for and what it means. Now, again, we're very big on discussing the fact that when you know what you're looking for, you're not lost anymore. And that's a really critical part of trading, because one of the biggest challenges and roadblocks, and I'm going to show you our coaching call in a second, the very biggest thing that we ask is, what are your top 2 challenges? What do you think right now is holding you back? What part of the market is, man, if I only understood that, then I'll be I'll be that guy, I'll be that woman, I'll be the person that all my friends are jealous of because I'm taking money from the market. I'm making the stock market make me money. That comes back to a very simple thing. You need to have an edge. And the edge basically means, and let's strip out all the trading jargon and all that other nonsense. What do I expect to happen? And how do I know if it's happening, if it's still valid, and when is it changed? When you can answer those 3 simple questions, all of the stress in the stock market goes away, because you're no longer guessing anymore. You're literally saying, that's what I'm looking for. And when I see it, then I plan to do something. If that's what I'm looking for and I don't see it, then again, we're going to hang out and have coffee and talk about, the Mets. Mets are in first place. Does everybody understand what I'm trying to get across here? And especially now, if you happen to be watching this at a later time, in 2022 or in the middle of 2022, the stock market came off a raging bull market that we had in 2021, and the market turned in January. Quantitative easing went away, and all of a sudden, those easy gains, the close your eyes, just buy anything, it's going up, that is gone. That went. And I think everybody kind of got caught off guard because it was kind of easy where you didn't have to make a decision. And hopefully that's why you're watching these YouTube videos with me as often as possible. And please do me a favor, if you haven't done so already, we offer a lot of new content as well. Hit that subscribe button if I'm doing a good job of helping you learn. So the point that I want to make is, I'm going to challenge you this weekend. If you got caught off guard when 2022 starts, and maybe you're sitting on a bunch of big losses that now you'd love to go back to yourself and talk to yourself and say, stock market turned, it's doing something different, I should have gotten out, or I should have scaled back. This is what I'm talking about. Knowing what you're looking for means you'll never again be overwhelmed or lost in the stock market. That's a very big deal, because now you're never confused. You're like, no, that's what I want. So bringing this back to some of the ideas that we're looking at right now, and these massive percentage moves off the lows, this is a short covering rally. It's been a beautiful, beautiful rally. But when you know what you're looking for, and a short covering rally is fast and unexpected after a big move to the downside, knowing what we're looking for, that tells us right now, for me personally, on these short-term trades, I don't believe it's a bottom yet until the next price action we see. And I'm talking about a longer-term bottom. Our community, our boot camp, our members of our order flow pro have been massively taking advantage because we're really good at reading the tape, which means we're not fighting what we see, especially when we know what we're looking for. But I want to, again, I don't like to talk about what happened and forecasting or saying you should have done this. I want to talk about what we're looking to go forward. So you can go back to Monday's video, and throughout the week, we've been talking about the market started to rally. We were saying that take advantage of these opportunities, look for the best stocks to buy now. Now I'm telling you, as we head into Friday, and we're going to talk about this, which is very, very important, which is the Fed meeting coming up next week. And I'm going to compare this so you can see July 26th and 27th, right? I think universally everybody agrees right now. It's, there's kind of websites out there that there was talk about it being a point. Personally, I think that was nonsense from people in the Fed chairs, just throwing stuff out there to see how the market would react. They did, and now it looks like there's a pretty good lock on 3/4 of a point. So I want to walk you over to why you need to pay attention to what do I expect to see, what am I looking for, and what's most likely going to happen, and why I think right now we're in a short covering rally. We're probably going to pull back over the next few days. So that means me personally locking in some of these short-term gains in the bearish market. So remember also profit taking. If you're in a bullish market and the bigger picture is to the upside and you're buying in that direction, you can hold those trades a little bit longer because you have that wind behind your back. Your trading order flow is in the same direction of the tape that you're reading, and you have every reason to expect it to follow through a little bit longer. Is that the case right now on these stocks that rallied hard off the bottom recently? And we'll even go, let's stick with the financial stocks because they're pretty easy to get a grip on, especially take a look at Wells Fargo. And again, this is a pretty strong move off the low. Citigroup, by the way, I just want to mention this now before it happens. Again, we like to look forward and talk about some ideas going forward. Citigroup, for me personally right now, is going to end up being one of the more trades with conviction that I'm going to be talking about over the next 3 to 6 months. The earnings were amazing. They kind of carried the entire market. So what I'm looking for in Citigroup is, I'm going to pop this here in here, the 50-period moving average. That's my main swing trading line. So you can see we have some resistance over here where sellers did something significant at 54, and then over here in this 50, 55, 55 to 57 level. So what I'm looking to see happen right now in Citigroup, because we're kind of right at this level right now, I'm looking for it to pull back for a couple of days. I'm looking for, this kind of price action. Maybe there's a couple of days. So again, this is the part that I hope I'm teaching you, is that you need to have the guts to say, I know what I'm looking at, and here's what I expect to have happen next. If that happens, then I plan to take that trade with conviction. But I'm going to bring up something in a second from last night's coaching call that's going to really bring this home for you. Okay. So that's my idea. That's my argument. That's the reasons that I'm looking for. Earnings were amazing. It carried the market. It lifted all these other bank stocks specifically. If that happens, I'm going to start building a position in Citigroup. But I'm waiting for it to pull back because it's a little bit too extended right now. Because remember, we spend a lot of time talking about the optimal entry. Right now, it's a little bit beyond the optimal entry. I'm going to have a piece of my full position. Most likely, it's going to be half of my initial piece, fully expecting this big move to the upside to kind of be absorbed. So you can see, again, this percentage move, especially off of the low where monster volume happened the day before earnings came out, which you can see the earnings over here. I do believe because of this resistance and because of how far we've gone off the low, we're probably going to go sideways to maybe down just a little bit over here. It's just a natural function of the market. It's not bad. It's just push up, pause, and then we look for the next move. So I'm looking to put on that first piece for a longer term swing trade right around this area, which is basically between 52 and 55, maybe 50 to 55, get beyond that 55 to 56 level, and then we have a much higher profit target, and that's where we're going to start to look all the way up in this area, up in the later 60s. That's going to be the map. So hopefully you're writing this kind of stuff down, maybe going over it, because I think that the trade management part of it, the reason for the trade, and then how I plan to map this trade out for myself is important, because now it starts to open up some possibilities for yourself. Be like, wow, I don't have to have the perfect entry. I just have to have good ideas and start to work my way into those ideas as I get feedback from the market. Now, again, I want to remind you, everything we talk about here is for educational purposes. I'm talking about the trades that I do. My mission is to help you make better decisions. It's up to you to make that final decision. I just want to be clear about that, right? So we can also talk about the trade that we mentioned on Wednesday in Netflix after earnings, and it's actually still mapped out here. Let me get this guy off the screen. If you remember, we talked about Netflix and the gap up after earnings, and we were going to use that as our potential stop loss. So what we were looking at in Netflix was if the stock rallied after earnings and stayed there, which again, if we go over to the short-term chart, we'll take a look at the 15-minute chart. That was the big part of it. It actually rallied and sold off hard all the way down to let's say 200. So it actually sold off $8 intraday. So think about what we just said. It gapped up. We had that level. We said wherever that opens up, that's going to be our line in the sand. We don't want to get shaken out in case some early profit taking comes in. And it actually did. It opened higher. It went down $8 right after the market opened. So raise your hand. If you bought that thing, you're looking at it, you're like, I got to get out of this thing. It could get crushed. It's down $8 and you panic out of it. But we kind of prepared to not have that happen to us pre-market. If you remember, you go back to that video, we said, let it open, let that line be our stop loss for a potential swing trade, and let smart money step back up and prove to us that they're spending money to hold the stock and this earnings was good. Well, at the end of the day, like we said in that last 30 minutes of the day, we said if we're above that line where it opened at the end of the day, then we were going to look to initiate a new swing trade and use that opening price from the day after earnings as our potential stop loss. Now, what's exciting about that is we know that the end of the day and the open, that's our definitive stop loss. So you have to make a decision. Am I okay with that? So if we map that out on the trade here and we start to do the same thing here, this is actually kind of the last half hour of the day. That distance right there, the open and where it was closing, that was essentially our risk. So once you have the risk on the stop, the distance between the entry and the stop loss, the only thing left calculating now is, am I okay with that stop loss? How many shares am I okay with based on that risk? And then what's a realistic profit target based on the distance between your entry and the stop loss? Again, that's the initial target. We're not going to put a limit on what it could make, but that's the initial target. So in this case here, we're talking about 208 to roughly 216. So that basically is an $8 risk on that trade, which is pretty reasonable for Netflix. If you can trade Netflix, that's a pretty reasonable stop loss. So the only thing from there is now calculating an initial profit target. And we map that out as well. So I hope that helped you to really kind of take all the confusion out of setting up a swing trade, especially after earnings, because I think a lot of us really like to be trading those kinds of earnings catalysts because you get a really nice pop or implosion off of those, which actually now we're going to take a look at Snap. Snap actually got smoked after hours. They missed on revenue. Stock, last time I looked, it was actually down 25%. And let's see where it is. Now the stock is down 11%. It's down 30% at this time. So again, this is a little bit more of what we're talking about, a short covering rally versus a reversal of the stock. So Snap, I'm staying away from. I don't short stocks that are less than $20. So I'm not even going to look at them. Certainly not looking to bottom fish. I also want to talk about one other stock that's been in the news recently that got a downgrade, and kind of important to know these things, which was Micron. Micron actually got a downgrade, and you can see it's actually down 4% at this point. And not a coincidence. You can see why we put the 50-period moving average in there. If you happen to be a swing trader, you have a full-time job, which a lot of people in our community are, 50-period moving average for me personally, when I start running my scans, that's kind of like the minimum criteria, where if it's below the 50-period moving average, I'm generally not looking for a longer-term trade. If anything, I'll be trading on a shorter time frame. But I want to get back to the short covering rally and discuss what that means in the market. And I want to compare it to what we saw last time, and especially tying it back in with what the Fed is. Now, I hope, and this is really like my biggest mission with you, is I hope that through these videos, we're connecting a little bit and you're understanding that trading at the highest levels does not need to be complicated, but it does need to be structured. And structured simply means that I know what I'm looking for, and here's how I'm going to plan it out. So if we take a look at the current price action in the SPY and this move to the upside, we do have resistance here So you can see we're down a little bit right now. Again, doesn't mean that we're definitely going down today. It just means that we're down right now. Now, what we're going to compare it to is this move over here, which was the last, not the last Fed announcement, but a Fed announcement heading into, and they were expecting to make a big announcement. And if you remember, Apple in that same period of time had this vicious move to the upside, which was also a short covering rally. And this is what happened after it. So that's interesting, right? But what does that mean for the next trade? Well, the way the market is rallying off of this right now, it's short covering. It's people exiting their shorts. So shorts is people betting on it going down, and it rallies. And it's a fast rally because they're getting out of those trades. So you have two different groups of people buying at this point. If you bet the market was going down and you had to get out of that trade, you have to call what's covered your shorts. So that's where short covering rally terminology comes from. So you're actually buying. Smart people, let's see, let's pull somebody in here. Tom's with us every day. So Tom notices also that the short covering is happening. We're getting a fast move to the upside. Tom's like, well, I'm a short-term trader. I want to hop on board. So now you have two different groups of people. People covering their shorts, which means buying those stocks back, and new people that are buying. So now you have two different groups, and that's what creates this really fast move to the upside. So the question on our minds right now, again, I told you already, I'm moving up my trailing stop loss on these momentum swing trades, is what happens next. We're not going to forecast what happens next, but here's what we're looking for. If the market pulls back hard, that validates that short covering. And that was just people panicking, getting out of short sales because of the indecision of the pending Fed announcement, which is something else we're going to talk about in a second. Now this is the big if. This is where we kind of like, you'll hear me in the community say, belly up to the bar, there's something to do when we notice something really obvious. If after the Fed and heading into the Fed next week, we do not go straight down as fast as we went up, and again, we'll take a look at that on the SPY, but we went up and pulled back hard after that announcement. What we're looking for really is this, a push up and sideways, but sideways we want to see on demonstrably lighter volume. So what we are looking for next week, and again, yes, we're mapping out next week, but it's pretty simple. What we're looking for next week, especially heading into the Fed announcement and then after the Fed announcement, is a light volume pause. If we get a very muted reaction to the 0.75 to the 75 basis points that they're expected to raise, widely expected to raise right now, there's a good argument that that was what was expected. If they do what was expected and don't shock the system, you got to then pay attention to all the hawkish versus dovish type conversations and what they believe is going on with inflation. Do they think that they need to raise again? Those types of conversations are going to lead to that sideways price action. If they say anything remotely that we think it's starting to subside, and amazingly, if they shock the market and only raise by 50, then we're going to start to see, meaning they don't have to give that extra help, then we're going to see a rocket ship to the upside. So these are the things that we're looking for next week in the price action. But just to really bring that home and keep it in simple terms, what we're looking for next in the market is a light volume pause. We had this big fast move to the upside, and now we want to go sideways on decreasing volume. If we see that, and especially if the tech stocks that have been strong, and we just had a nice breakout in Apple yesterday, AMD has been strong recently, NVIDIA, some of the stocks that we've been watching that has been strong. It's actually down a little bit this morning. If the tech stocks and the financial stocks continue to maintain this bid, having tech and financials in play at the same time, that you're cooking with gas at that point, and that's going to be really exciting to be involved in the stock market. But what's interesting here now is we're mapping out. Remember what I said before, what do I want to see? And this is something that I train everybody in our communities. What do I want to see? What don't I want to see? If we see that price action, we're going to sit up in our seat. We're going to say belly up to the bar. Let's start to work some positions, hang on a little bit longer, because that's the price action that's healthy for a stock market reversal. If we start to push to the downside again, and we see that faster move, we're probably going to get a fast move and then a pause that way. Then we start to look at the other side of the market where we look for weaker sectors. So getting into the best stocks to buy and working our way through the sectors of the market And you can see how strong we've been, even over the longer period of time. The only thing that's showing some relative weakness is basic materials and energy. And energy is even perked up a little bit right now. So we need to then work our way into some of the ideas that are showing relative weakness while the market is strong. And one of the stocks that meets that criteria right now for looking for it to go down, which there's not a lot of stocks that are going down after earnings right now, is IBM. IBM is one of those stocks that is now showing relative weakness, had a pretty good move to the downside yesterday, even in the face of the market being strong again. So you can see what IBM is doing here. So IBM will be one of those stocks that, again, for those of you that either buy puts or understand short selling, that's an idea that I'm going to be looking at on the short side this week, the end of this week, and especially next week, based on what happens, right? So now we want to work our way over into what are the best stocks to buy now based on the way the market's unfolding. If inflation numbers are not good, well, that's where we're going to go over to consumer staple stocks, otherwise known as consumer defensive stocks such as Costco, Walmart, Pepsi, Procter & Gamble, those kind of stocks. So if we take a look at those guys, Walmart and Costco actually both just recently had decent breakouts. You can see paused over here for a few days, and there's one level here, and then the next level over here. Remember we talked about just before the gap fill. You can see Costco. We've been talking about McDonald's around this 255 level for I think about a week and a half. It still hasn't gotten through that level, but that's, actually it did and pulled back, but it's still kind of resting right around there. So what we're going to be looking for as the market starts to unfold is this. We're going to start to watch the sector rotation. So again, I give you the sector rotation as the week unfolds. I give the actual stock-specific ideas to everybody in our community every single night. By the way, if you haven't been in one of our boot camps, the next one starts next Monday. You can click the link below and learn about that. So now what's critically important going forward is tracking the market, which I just gave you that whole outline of the market. And now where is the money flowing on a day-to-day, week-to-week basis? So if the market rallies, we already know we're looking at financials and if those tech stocks maintain that bid. Now, tech stocks have been very strong, but if they raise those interest rates, tech stocks are also known as growth stocks. Growth stocks borrow money. Higher interest rates will most likely see tech stocks take a hit, assuming that's what happens next week. So again, if tech stocks and financials, yes. If it's only financials, then we shift over into that sector and we trade financials. Now, heading into today as well, because Snap took a hit, Twitter, I don't know if Twitter reported yet. I haven't seen the numbers yet, but Twitter's not expected to have good earnings, and they obviously have all that other stuff is being dragged down right now. So all of the stocks in communication services, and I'll just give you a quick look at that right now, which is over here. You can see communication services. If we work our way over into sector stocks, you can see this is the list of stocks in communication services. So you can see you got some Chinese stocks in there. You also have Meta in there. You have Spotify. You have Twitter. You have RBLX. Okay, you get the idea. Disney streaming service, right? And obviously Snap and Netflix and Roku. So Snap got hit, Twitter coming out. If those stocks carry the market lower today, and specifically that group of stocks, those are the stocks that if you understand buying puts to see things go down, or if you understand short selling, that's the group of stocks to be paying attention to right now because that catalyst is fresh and we're looking for a move to the downside. So now I want to walk over and I want to give you some ideas into, oh, by the way, thank you. I appreciate that, David. That's awesome. Yeah, we launched Options Trading Pro this month. We're very excited about that. So what I want to walk you through now is some ideas. Again, this is our email that went out this morning. So I want to give you an idea of what I'm talking about today. Not calling a top of profit taking ahead of next week's Fed meeting, very, very likely. Tech stocks and financial hold the bid without a pause. Now, this is the part that I want to get across over here. Number one is here. This is a big part of what we discussed last night, and I really want to make sure that you are comfortable with this. One of the biggest challenges, especially this year in 2022, has been the comment that I'm taking a bunch of small losses. I'm super good on my discipline. I'm not making money and it's getting really, really annoying. There's two ways to fix that. Number one is mindset and number two is strategy. So, if you happen to be raising your hand saying, yeah, that's me. I'm taking a bunch of small losses. I'm being disciplined. I'm doing everything I'm supposed to. Why am I not making money, right? Especially the last 5 to 7 days. If you struggled the last 5 to 7 days, it really just means that you need a better You need a better, more structured process of how you read the market, because the tape reading aspect of the last 5 to 7 days, oh my gosh, it's just been absolutely amazing. Oh, before I forget, GME stock split today. Keep an eye on that. So GME is actually going to open up around 38 something today. So the point that I want to make about if you're frustrated right now, number one is trading edge, right? Trading edge means most of the time it works, sometimes it doesn't. So you have to be very comfortable with that second part, which if losing trades don't follow through, but if you thought they were good trades, that's perfectly okay. That's a part of trading. The second part is if you're struggling, especially in the last week and a half, and you haven't had any decent gains, it really needs to, you need to rethink what your trading strategy is. Again, our strategy is order flow and tape reading. We've mostly been leading on the tape reading side of things because most of the order flow is bearish. So we're just shifting over now to what's going on right now, what's working in the stock market right now, and capitalizing on that. So if you're struggling right now, rework your trading edge, figure out what you need to look for. If it's not working for you, look, you could join my community. The boot camp's only $195. It's a dinner for everybody. Click the link below. If you don't want to join the boot camp and trade with me for a couple of weeks, that's fine. I hope you do. But you need to spend some time, like I do, with a legal pad. Get a legal pad out. Again, just sit by yourself and say, how do I know something's a good idea in the stock market? And write those things out. Then the next thing you need to do is make a list of what definitely does not work. And you have to stop doing it. We all know what doesn't work. Picking tops, picking bottoms, trading when it's in the middle of nowhere, trading on headlines, all that kind of stuff is very, very challenging. And they drain your enthusiasm and they drain your account. And that's where all those little paper cuts come from. So make a list of what you're looking for. Make a list of what absolutely does not work. And then as the next day the market opens, start following your own plan. It's not hard, but you need to take that time out to do it. All right. We're going to call it a day here, everybody. I really appreciate your time. Have an awesome, awesome finish to the week. Could you please do me a favor? If we gave you some value today, I'd really, really appreciate it if you can click down, hit that like button, hit the subscribe button so you get updates. I hope I earned it today. And if you have any questions, make sure that you leave those questions below the video. I really appreciate it. And if you want to learn more about the boot camp, also you can click that link below the video. Have an awesome day, everybody, and have a great weekend. I'll speak to you soon. I really appreciate it.